Now come to this particular question. This is also one of the beautiful question and one of the past examination question. Now see, in this particular case, partnership firm consists of three partners, HING, three partners, and HING, all of them are partners in their individual capacity. So this is a situation where a partner in individual capacity, and there is a possibility that there may be some transactions with the HUF of one of the partners. That's the reason specifically it is printed like that. I mean, straight away feeling. So that concept of HUF be a partner in a partnership firm, or partner is individual capacity, but the transactions are done with the HUF. These are the situations which will be created in this particular question. The deed of partnership brought a payment of salary of 2 lakhs to each HNG. Okay. So they are the working partners, and deed already made a provision. So these 2 lakhs each will be eligible for the purpose of 40B, subject to overall monetary limit which is provided by section 40B. Okay. So first of all, profit as per PNL is 1,50,000. So you can straight away start with 1,50,000. Okay. Profit as per PNL. Add 2 lakhs each to HNG. Okay. So add 2 lakhs. Add 2 lakhs. Okay. A new deed of partnership was executed on 1/10 of the previous year. Okay. Apart from providing for the payment of simple interest of 12% on the balance tending to the credit of capital accounts of the partners from 1st of April. Now see, you're executing the deed on 1st of October. And you are saying that I will provide for the interest from the 1st of April, something like retrospective effect, but that will not be accepted. The period of authorization will be taken as from 1st of October only. Okay. So authorized period for which there is an interest transaction, which will be undertaken for all these things. Okay. So this is one of the points that you have to keep it in mind, that your authorization period is from 1st of October. Although you are saying retrospective from 1st of April, and second point is it is only on the capital accounts. So your authorization under the partnership deed, the way you have signed that agreement, it is only on the capital account. But in the given question, I think it is capital account also and some current account also, or something like that also given. So only on capital account we will consider section 40B. Others, everything will go in the additions. Okay. So firm was dissolved on 31st of March. So that dissolution concept 45(4) will come into picture. If there is any distribution upon dissolution or otherwise, all that capital gains concept can come into picture. Okay. And were distributed among the partners on 24 of the assessment year. Okay. So now distribution of the asset also has taken place, but it has taken place on 20 April of the next year. So entire capital gains in the current previous year will not be there, because there is no transfer of asset in the current year. Already told you section 45(4), only in the year in which the transfer of the asset takes place. So transfer of the asset will take place in the next year, as already printed. So current year we will not have to worry about capital gains, apparently it seems, unless some extra point which comes into the picture. Okay. Now further, the net profit of the firm for the year after the payment of salary. That's the reason I've added the salary to the working partners. Okay. And debit credit of the following items. So it was after the salary, so salary is already added, and after the debit credits of the following items. Okay. So debit credits, interest amounting to 1 lakh paid to partners. So first of all, I will add 1 lakh. Straight away, transaction to partner interest, whether loan account, capital account, current account, loan account, whatever account, is it paid to the partner? Add it. First of all, add it. Thereafter, we will see 40B. Then interest amounting to 50,000 paid to partner on the balance standing to the credit of their account. Credit of their account. So account basically current account, not printed clearly current account, but it will be current account. So these 50,000 also I will add. Okay. These also I will add. Now, when it comes to the interest, these 2 points. First of all, I'll take up the third point also. Interest amounting to 20,000 paid to the HUF of H. Okay. Now, partner is Mr. X, personal capacity. Now, interest is paid to the HUF. So, for this, there is no adjustment. In other words, for this transaction, 40B provision will not be applicable, because it is a transaction not with the partner, it is with the HUF of that particular partner. Okay. And therefore, under point number 3, we will not require any adjustments whatsoever. Okay. So now almost that interest is done. Now let's see 40B interest deduction. Okay, now 40B interest deduction, first of all, it is authorizing only from 1st of October. Okay, so and 1st of October, and it is authorizing only on the capital account. Okay, so 40B eligibility for the limits, 1 second. Okay, however, here it is already 12%, so percentage wise there is nothing wrong. The interest provided at the rate of 12%, so there is nothing wrong, but that period of authorization, okay, and it is on the capital account. So first of all, this 50,000 will not be eligible for 40B. Okay, and out of this 1 lakh, it is 1st April to 31st March, but authorization is only from 1st of October and onwards. So October, November, December, January, so it will only for 6 months. So out of this 1 lakh, the authorization period is only 50,000. So 40B interest deduction eligible will be only 50,000. Finish. So interest adjustment is over. So in short, add 1 lakh, add 50,000, and eligible 40B will be only 50,000. Okay, next point. Payment of 25,000 towards the purchase of television set made by the cross check. So this is as good as your cash transaction, because it is otherwise done by means of an account pay check. So because of that, you have to add 25,000. Okay, then the next point, 30,000 being value of gold jewelry received as a gift from manufacturer for achieving the sales target. Now actually this is a transaction in kind, but it is already stated that it is already debited credited. It is already stated here that it is already debited credited. So this 30,000 is already credited, and it is anyway income, because any incentive for achieving business targets are anyway part of the business income. Even section 28 I explained that you value of benefit perquisites out of the carrying on of business and profession. So this is anyway income, so no adjustment is required. It is anyway taxable, and it is anyway covered up by these particular provisions. Okay, then next point, depreciation amounting to 15,000 motor car bought and used exclusively for business but not registered in the name of the firm. Now this is also some of the case laws, that the depreciation which is on the assets beneficially held by the firm, but registered owner is someone else, that means the partner. Okay, so as long as the firm is the beneficial owner, that means the funding of this particular car is done out of the firm's balance sheet, and it is an asset of the firm, although registered in the name of one of the partner for some technical reason, will not disentitle the firm for the purpose of depreciation allowance, and therefore the depreciation is to be allowed to the firm. That means assets held beneficially by the firm will be eligible for the purpose of depreciation. So for this particular 15,000, no adjustment. However, there can be adjustment like book depreciation at tax depreciation less. If such thing was there, I could have done that. But I think so far nothing has come. So right now no adjustment. Okay, right now no adjustment. Okay. Now next one, depreciation under 3212 amounting to 37,500 on the new machinery bought and installed to manufacture pens on 1st of November. Cost is 5 lakhs. There was no increase in the installed capacity as a result of installation of the new machinery. Now this new machinery can also be eligible for the purpose of additional depreciation. Okay, and it is installed on 1st of November, so it will be half the rate. So normal depreciation will also be half the rate, and additional depreciation will also be half the rate. So I can say that this 37,500, which is a book depreciation, so add 37,500 the book depreciation, then the tax depreciation. Tax depreciation, again friends, depreciation and the tax laws, it is with respect to WDV of the block of assets and all that, but exact that block and all that details is not given. So only based on the available data I'm doing the calculation, and that's only that we can do in the exam. Okay, so 5 lakhs into 15% into half, because it is 1st November. Okay, so this is going to be 37,500, and additional depreciation will be 5 lakhs, 20% into half. Okay, so this will be 50,000. So 37,500 add, then income tax depreciation again 37,500 less, and additional depreciation also less. Okay, so that will be the adjustment done. Now interest amounting to 25,000 received from bank on a fixed deposit out of the surplus funds. So this will be an IFO as income. So minus 25,000 from business income and add 25,000 to IFOS. Okay. Further, the firm furnishes the following information relating to it. Closing stock in trade was 60,000 as per the method of lower cost market value. Market value of the closing stock was 65,000 rupees. Now friends, Supreme Court judgment, where Supreme Court has always said that when the firm is dissolved, see in this particular case on 31st of March, the firm is dissolved. Somewhere some data has been given to us. Okay. The firm was dissolved on 31st of March. Here it is given. Okay. So now since the firm is dissolved, in this particular situation, we should do not cost market value, whichever is less, as a inventory valuation, but it should be only the market value. However, the data exactly like business also discontinued or like that has not been given to us. That means it is not a case of a firm converted into a company or something like that. In that, had it been such a situation, then I could have thought differently. But now it is only dissolved, and no data about business continuance have been given. So I also believe that the business is also discontinued, and therefore I have to go with the market value approach. So as per the books, it is 60,000, but it will be valued as 65,000. So plus 5,000 will be the income. Okay, so that will be the additions which will have to be carried out. This is additional information. Brought forward business loss, I will do that carry forward sort of adjustment. The fair market value of the capital asset 31st March was 20 lakhs. Cost of their acquisition was 15 lakhs. So 20 lakhs minus 15 lakhs. This is section 45(4) capital gains, but these capital gains cannot be taxable in the current year because the transfer of the asset is not taking place in the current year. The transfer is taking place in the next year. So going by the market value approach also, market value of the assets, it will be taxable, but it will be taxable in the next year, not in the current financial year. That means in the current computation, we don't have to do any such adjustment for the capital gains in the circumstances. Okay. Compute the income of the HIG required. That's all. So having done that interest adjustment also, all the adjustment completed. Now just apply the monetary limit of section 40B and just finish off the calculation aspect of this particular answer.